Do y'all know what rates are going to do? Because I feel like I am just guessing right now. I'm sitting here, I'm trying to take in all the information, and this market is just so unpredictable. I'm hearing from lenders that have been in this industry for 10 years, and they're like, the way this market's moving with interest rates is nowhere near like it was pre-pandemic. These are unprecedented times. I'm taking in all the information I can and giving it all to you and trying to make a good or my best guess at what might happen based on what experts are telling me and whatnot. But oh boy, 3 weeks ago, we were sitting in a great spot. We saw rates were sitting at 5.99% as a national average. That's closer to 6.7 now. It is getting a little crazy. Some bad inflation reports coming in. Nothing to be too freaked out about, but it's like, what's going on? So welcome back to my channel. Anyone who doesn't know me, my name is Knannini, loan officer here in Phoenix, Arizona, and happy to be passing along some more information that happened this week, the last week of February of 2023, going over what happened in the market for rates, mortgage news, and things I'm looking out and just in general of what happened. Rates ticked back up again, another, I'd say 0.25% this week, and some news that came with it we'll dive into here shortly. But buyer activity has slowed down, as with rates going up typically happens, and I'll lead off with that. Mortgage applications were down 18% last week after an amazing start in January, where I was telling everyone that the market's back. It was for a hot second. People were coming out of with their New Year's resolution of buying a home, and it has dwindled. And I think people are waiting for either the right time when it comes to life, or just waiting for those rates. And we'll have to see what gives first. Also had a few other pieces of news, and I want to dive into this one a little bit more. We had the leading economic indicators, which is a report that comes from the Conference Board that came out for month over month. And it fell at 0.3% in January. Not so much the number I want to talk about. I want to talk about the 6-month growth report that came out along with that on the leading economic indicators. So typically on a 6-month growth, if we are sitting at 0% growth, it's a warning that we might go into recession. It's just something to monitor. If it is negative 4% or more, meaning more than -4, less than -4%, that is an indication that we are heading towards a recession. The 6-month growth over the last 6 months for us in this current economy was negative 7.4%. That was probably a clear indication that we are heading towards a recession. This report and this number has been very, very accurate over the course of its existence. So this number is going to be a very leading indicator when it comes to a recession. When I say recession, at this point, I think that's what we need for rates. If we're going to talk strictly for rates, not the economy, for rates to come down, we need to curb inflation. We need the recession to come in. We need to be declared in a recession, and then to hopefully stimulate spending again in the housing market, we need to get that going so that is stimulated in the housing market. That is kind of where we're headed. We have these numbers showing it. Unfortunately, with inflation kind of going up and down each month, I think we're going to start on that downward trend. I'm hearing from Barry Habib at MDS Highway that once we get into May 10th, get that CPI report on May 10th, that's going to start to really show that we're going to get on top of inflation. Rates will start to track down, and maybe we head into a recession in 2023. And that's what the Conference Board is projecting. They're forecasting we're going into a recession in 2023. So like I said, for the housing market and rates, unfortunately is what we need. It may come at the cost of jobs for certain industries, but that is the way things are tracking right now. Other information, another inflation report came out today, the Personal Consumer Expenditure Report, and it showed that inflation rose at 0.6%, a hotter number than expected in January, which tags along to the CPI number and the PPI number, the Producer Price Index and the Consumer Price Index, all showed hotter than expected, which is probably why it is why we're seeing an uptick in rates. People were not expecting these hotter than expected numbers. And lastly, something I'm just noticing in the market, as well as seeing me personally and then seeing in the numbers, new construction sales over the last 2 months have grown each month at 7.2%. I think a lot of people are finding kind of a little, safety net. That's probably the wrong word, but they're finding a nice little piece of the market where they're able to access a brand new home. They're able to access some amazing incentives from these big builders that are going towards interest rate and helping them afford the first year, the first 2 years, maybe it's a permanent rate buy down. They're putting these incentives towards rates to help them qualify for these monthly payments. honestly, I can't say anything wrong with it. It's great for buyers. They're getting, like I said, a brand new home, something people want, while also getting a rate, but it's giving them a nice little piece of safety from this higher interest rate market. A lot more people are heading that route, and good for them. I mean, they're finding an amazing deal, and I'm noticing it a lot here in the Phoenix Valley. Tapping into the people I know in the Seattle area, I've seen a few people go that route as well. No, I think more and more people should at least look at that option if that's something that fits, what you're looking for in this market. A new construction might be perfect, and working with some of those bigger builders, they're offering amazing incentives. A lot of lenders or just other people in the industry can't compete with. Overall, that's about what has happened this week. Like I said, rates yet another week of ticking up. National average is about 6.7, 6.8%. We're going to be very interested on this BLS jobs report that's going to be coming out here in the next 2 weeks, mixed with seeing these updated inflation reports. This is going to be a very month-by-month case, tracking rates, inflation, all of that. So happy to be bringing more information to you. And if you haven't before, please hit that subscribe button. I want you all to be getting as much information as possible from me week in and week out. Also hit that like button. Would appreciate any support there. And if you ever have any questions, please drop them in the comments. But that's all I have for you this week and today. Hoping to see some better bounce back numbers going into next month and next week. Take care, everyone, and we'll talk next week.